Now to business. Nigeria has declared July 11 and 12, 2022 as public holidays to honor the el-Adha celebration. Therefore, there were limited days of trading last week. On the exchange's trading floor, investors transacted a total of 504.322 million shares worth 7.517 billion naira in 12,393 deals last week, as opposed to 822.404 million shares for 10.366 billion naira that did so in 20,643 deals. Now, the NGX all-ShareIndex and Market Capitalization appreciated by 1.27% and 1.28% to close the week at 52,215.12 and 28.158 trillion naira, respectively. Now, joining me to discuss this further is Azeez Lawal, the Managing Director at Trustbanc Asset Management Limited. Thank you so much for joining me on the news, Azeez.
Good morning. Thank you for having me.
Good morning. A pleasure to have you. Now, Azeez, we know that the equity market traded for 3 days in the previous week. Is it responsible for the quiet performance we saw as at last week?
Not necessarily. What we saw last week is a reflection of what we've seen in the last 3 to 4 weeks. The market has been largely quiet. The possible tonic that will wake the market up is the release of half-year result of companies. So we expect that to start shipping in another 2 weeks thereabouts. So largely what we saw last week is more of a reflection of what we've seen in previous week. And until we start seeing results, the market will most likely continue to trade on that low note. Thank you.
Okay, Azeez, let's also talk about the inflation data that was released on Friday. Would you say that this influenced the outcome of trading in the financial market?
Yeah, thank you for that question. That's a double question in one, right? Yeah. So for financial markets, financial markets have a lot of headache to bother about now than inflation. So not necessarily, but when the inflation data come out, it did not influence any of the markets. Like I noted earlier, equity market is generally dull. Inflation was not going to change that, whether for positive or for negative. Then for the fixed income market, largely the fixed income market has been running a serious deficit in terms of liquidity. So inflation data coming in was really not going to bother the market. The hands of the market really is full with different challenges and realities, and inflation was really not going to change much in that regard. Thank you.
All right, Azeez, now finally, before we let you go, we know that obviously the yields are on their way up in the fixed income market. What exactly is driving this, and what investment insights would you have for the audience?
Like I noted earlier, in terms of what is driving it for fixed income markets, what typically drives fixed income market? At least in the last 1 month, is depth of liquidity in the system. So the rising yields I was seeing recently is because the system has been trading on serious deficits. Typically, when that happens, market players start to sell off to meet their funding obligations. And when they sell like that, prices go down and yields go up. The advantage there for investors, that's myself and you, is that now you can go to your bank. Let's say before now, you were placing 100,000 naira with your bank at 3% for 30 days. You most likely will get around 6% for the same tenor, for the same amount of money. So that's the advantage for investors. You cannot go to your bank and negotiate for higher rates because there's serious deficits in the system and yields are going up. Thank you.
Azeez Lawal, the Managing Director of Trustbanc Asset Management Limited, thank you so much for the insight.